Welcome! Today I'm revealing the second stock I'm buying for our brand new 2026 €10,000 portfolio. And why it's this one. I will explain that by doing an earnings and stock price projection on this stock. I think this is essential to getting great returns as a long-term investor, so I hope you value this content. Today's stock is not a stock you're going to hear about in every investing channel. So I'm excited to share it with you. Now if you're new to the channel and wondering why it is different, check out our introduction video where I explain the purpose behind our portfolio and how we combine smart investing with real-world impact. The link is up here and in the description. The second stock I'm buying is Mama's Creations, ticker MAMA. It is a simple and basic business to understand because it is a producer of deli foods. They supply prepared food to caterers and stores. But the fact that the business is not in a spectacular sector does not mean that the future gains can't be spectacular. The projection I'll show you may surprise you. And if you've seen the video of my first stock pick, then you will probably be interested to see if the upside potential in this stock is as good as it was in that one. The first stock pick has already gained about 10% since I made the video just a couple of days ago. So if you're interested to know which stock that was, then click the link up here or in the description. To explain why Mama is the second stock I'm picking, I will do a quick recap of my process and focus in picking stocks. I don't pick stocks because everybody is talking about them or not, if they have momentum or not, if there's news or not, or any other subjective short-term stuff. My method is all about the fundamentals of the companies and the long-term prospects of the stock. What I do is try to make a long-term projection of future earnings per share based on past earnings, the trends in those, the company's next quarter guidance, and assumptions on growth slowdown or pickup beyond the next quarter. I try to be as realistic as possible on those numbers. And I do that for every company I am looking at. If I can't make a decent earnings projection with any degree of certainty in the numbers, then I will not invest in the stock. What helps me a lot with future earnings projection is if the company gives some kind of longer term guidance. I love companies that do that. That longer term guidance was the reason I invested in the first stock I mentioned, and it is the reason that I'm also buying Mama's Creations. So let's look at the numbers. The text below is straight from the Mama's Creations website. It's their latest Q3 earnings release. I won't go over everything, just highlight a couple of passages. First, the CEO, Adam Michaels, indicated that the company's recent acquisition and integration of Crown One Enterprises is going well. With that acquisition, the company has scaled up revenue by 50% year over year. He states that they are now focusing on integration of Crown One to increase margins. The CEO is very focused on margins. He repeats that in almost every interview. It's a great thing for profitability, so we love that as investors. He also states that the acquisition has opened up new customer channels for cross-selling, so revenue should keep increasing. And he's repeating their long-term goal for 2030 of becoming a $1 billion revenue deli provider. So revenue increase and margin increase, a double whammy. And for our projection, that $1 billion figure is a great target together with another long-term target the management has set. And that is the target of a 10% net income margin. A 10% net income margin is an ambitious target for a food company, but it is achievable once efficiency from large scale sets in. Last year, Mama's Creation was mainly focused on scaling up revenue with the Crown 1 acquisition, and because of that, the net margins were only around 3%. So that gives a good runway for growth in margins and therefore earnings in the coming years. But the next couple of years, the company is first aggressively growing revenue to get to 1 billion in 2030. And because of that growth focus, I think their efficiency and therefore their net margins will not already be at 10% in 2030. So to be a little bit more conservative, I will only use a 7% net margin in our earnings projection for 2030. Let's see where that will lead us. 7% net margin out of 1 billion of revenue is 70 million of net income in 2030. We have to divide that by the total numbers of shares outstanding to get a net income per share. Currently they have about 39.6 million shares outstanding. The CEO has already stated that he's not a big fan of diluting shareholders too much. And you can see that in their shares outstanding over time. They have diluted a bit because they are doing acquisitions to grow, but they have only diluted the share count by about 5.4 million shares in the 5 years from 2020 to now. Let's assume that they dilute by another 5.4 million from now until 2030, and that gives us a total of 45 million shares in 2030. So 70 million divided by 45 million is $1.55 of net income per share in 2030. These are rough numbers, of course, but I think it gives a good indication. Now that we have a net income per share for 2030, we can multiply that with a PE multiple to get a stock price estimate for 2030. When I have to do an estimate on a future PE multiple, I focus most on two things. One is I see if the business is not in a sector that has highly fluctuating margins, because those sectors get lower multiples than stable ones. The food industry is a pretty stable sector, so that does not really limit the PE multiple. Then, second, I look at the growth of the earnings to determine the PE. I usually take a factor of about 1 to 2 of the growth as a rule of thumb. Those of you already familiar with fundamental analysis will know this as the PEG value, which stands for price earnings growth. I go closer to 1 if the earnings growth is decelerating. I take about 1.5 if the growth is constant, and I will go closer to 2 if the earnings growth is accelerating. I will come back to this topic in more detail and with some examples when I make a video on how I value high growth stocks. For now, for Mama's Creations, my assumptions are that they will grow earnings at very high double-digit percentages in the next few years. Just because logically they are growing revenue aggressively and they want to increase margins on top of that. But after 2030, I think the growth percentages in earnings will be lower than the next couple of years. I will show two scenarios here. A base case with 20% year-over-year EPS growth after 2030, and a bullish one where they will still be growing EPS by 30% year-over-year in 2030. Now keep in mind that we have only put them at a 7% net income margin in 2030, and their long-term target was 10. So it could even be that my 30% EPS growth rate is conservative here. But let's run with these two scenarios. I will assume a fairly conservative PEG ratio of 1.2, which means that my PE is about 24 for the base case and about 36 for the bull case. With 155 of EPS multiplied with a 24 PE, the stock price would be around $37 in 2030. And in the bull case with a 36 PE, It could even be well above 50. The current stock price is between $12.50 and $13 now, so that would be a 3 to 4x of your investment in 4 to 5 years. So yeah, the future potential looks very interesting to me. Of course, like with every company, there are also some risks. What if competition increases, or if they have trouble integrating their acquisitions and therefore have trouble increasing their net income margins? But I personally have confidence in the CEO Adam Michaels. From the interviews I've seen, he comes across as very capable and focused on the right things. And I already like the acquisition of Crown One they did last year. Now I showed you some content from their very positive Q3 earnings in the second week of December. On those earnings, the stock jumped to above $14, and since then it has been taking a breather. Stocks don't go up in a straight line. But I see this pullback as a good time to accumulate shares, and with the long-term projection I showed you in mind, I think it looks like a very interesting stock, and that's why I'm starting a position in our brand new portfolio. This was the video of my second stock pick, Mama's Creations. Thank you for watching. It was not financial advice. I hope you liked the video and you learned something. If you did, then please click the like button. A video of the third and fourth stock I'm buying will be coming up very soon. Like Mama's Creations, these will also be stocks with high upside potential in my opinion. So subscribe and hit the notification bell if you're interested to see which stocks they are. And by doing that, you will also be helping the channel create more impact for nature. So thank you for that. The portfolio is already up because of the first stock we talked about, so hopefully we will be donating some nice gains come July. So subscribe to be part of that, because good deeds compound too.